Hi, and welcome back to Criminology. In our minds, the word criminal is usually associated with street crime, drug dealers or robbers and sneaking around in the bank at night and that kind of thing. But in the recent decades, these types of crimes have been decreasing in numbers over the years. A criminal can easily be a well-dressed businessman who goes to work every day and uses his advanced financial skills to transfer money out of the company and financial accounts into his own account without anybody noticing. That is an example of white-collar crime, which includes frauds committed by businesses and government professionals. Through non-violence, they can cause significant damage to investors, workers, families, and governments. Some high-profile white-collar criminals like Bernard Madoff, and I'll come back to him later, or Enron managers are known worldwide. But what is the situation in Canada? Its overall crime rate may be low, but Canada is not lagging behind with its white-collar crime professionals, neither in terms of their skill nor the financial damage they cause. A survey from PricewaterhouseCoopers report that more than half of the companies in Canada report being victims of fraud. Actually, Canada has long time been accused of being too soft on such white-collar crimes, the accusations being that the trials are way too lengthy and the sentences are way too low. But it has to be taken into account that this type of crime is difficult to prove and wrongful accusations are frequent. I'm going to give you a couple of examples of what white-collar crime in Canada looks like. You'll find one of them in your beginning of the chapter in the intro around the SNC-Lavalin engineering company out of Montreal. But I'm going to offer you two more. Bernard Ebers, he's a Canadian-born businessman who's serving a jail sentence in the United States for fraud and conspiracy. At the time, his case was the largest accounting scandal in the U.S. history. He was the CEO of a telecommunications company, WorldCom, and in 2002, the internal auditors discovered an accounting fraud worth in the neighborhood of $3.8 to $11 billion. That's a B, billion dollars. The company's revenues and asset values was inflated by using false documents. As a result, Bernie Ebers is now serving a 25-year jail sentence, and the United States has passed a new set of business and regulations to prevent such things from happening again. The second example of white-collar crime in Canada. Two businessmen, Gary Sorensen and Milo Brost, ran one of the biggest Ponzi scams in Canada. For 9 years, from 1999 to 2008, tricking more than 3,000 local and international investors, the investors were promised high returns, 35% returns on your money if they invest their money into a business with this gold refinement business they had come up with. But such things didn't exist. Instead, the old investors were paid up with money from the new ones. That's basically what a Ponzi scheme is, a pyramid scheme. The payments stopped and the fraud started to unravel. Many of the victims were left completely broke, having invested all their savings. The total damage was estimated between anywhere of 100 to 400 million. And Sorensen and Brost were sentenced to 12 years in jail. Okay, as with this chapter, and the other chapter we finished last week, property crime, are economic crimes, as I've mentioned. And remember, economic crimes aim to bring reward, some sort of financial benefit via embezzlement or fraud. Economic crimes are also divided into two groups: blue-collar and white-collar crimes. And as you might imagine, those distinctions were likely class-based originally. Today, blue-collar crimes include theft, break and enter, and arson, whereas white-collar crimes include most business-related crimes: fraud, embezzlement, and bribery. Typically, business-related offenses involved attempts to bend the rules of enterprise and commerce to increase profit and to gain an illegal advantage over competitors. In terms of illicit entrepreneurship, there are two categories to consider in this chapter: white-collar crime, which involves the illegal activities of people and organizations with a recognized pursuit of profit through the legitimate business transactions, and then the other being organized crime, which involves the illegal activities of people and organizations with a recognized purpose of profit through illegitimate business enterprise. The common denominator between the two phenomena is enterprise. The goal of making money through criminal means. Notice that the term enterprise does not distinguish legal or illegal. Therefore, criminal enterprise mimics the strengths of legitimate businesses enterprises. They're efficient, large scale and bulk for their orders, reduces the prices. There's a lot of advantages. Criminologist Edwin Sutherland first used the phrase white-collar crime to describe criminal activities of the rich and the powerful. But the definition has expanded greatly since it was first developed. Contemporary white-collar crime represents a broad range of behaviors involving individuals who act alone and within the context of a business enterprise. Potential victims are now recognized as including the general public, the employer organization, and competing organizations. Even though Sutherland's work was from 1939, it is considered important research into crimes committed by the wealthy and the powerful. His work also acknowledged that not all white-collar crime is committed by rich, and that often it is assumed incorrectly that white-collar crimes is not as bad as street crimes. Now, this has been assumed as most of us don't connect to outcomes of white-collar crimes as violent or serious public crime. However, corporate crimes can affect the environment and therefore other people, including their death, or that scamming people out of their life savings is victimless. Well, of course, that's not the case. People suffer, end up with major life changes at an age one may not recover, and for some could end up as suicide. So, by defining white-collar crime according to Sutherland, is any business-related activities that are committed by using deceit, deception, and dishonesty to carry out criminal enterprise. Okay, so let's look at the types of white-collar crime. We can take more contemporary look, and we need to remember that victims of white-collar crime can include the general public, the organization with the offender, or even competing organizations. Excuse me. Let's launch it again. Fresh pressed coffee. White-collar crimes include the following criminal activities: scams and frauds, bank and security frauds, investment and occupational fraud, and client fraud, public corruption, and corporate crime. We'll start with scams and frauds. Now, even though we have grouped the scams and frauds, they are not interchangeable. Both are crimes and use deceit to gain some sort of an advantage. However, they are very different. Excuse me. Fraud results in fraud results in personal or financial gain, whereas scams are almost always financial gain only. This textbook treats scams as more of a lower level crime and fraud as more of an elaborate ploys of deception. So just keep that in the back of your mind. Current examples of a scam are posted beside me and it's in your text on page 274. Whereas a result of the pandemic, COVID scams emerged. The image in the text, and it's beside me here, is a variety of scams used and employed to take advantage of people during trying times of the pandemic. The second image represents the top 10 scams and frauds in Canada in 2019. Bank fraud, any attempt to obtain either property or money from a financial institution by false pretenses, for example, forgery or misrepresentation, and this can include ATM machines, is being bank fraud. An important factor here is that perpetrators have to knowingly either execute or make an attempt to execute the fraudulent scheme to access money or property from a financial institution. The securities fraud, here a criminal will attempt to deceive, again it's always founded in deception, with false information and attempt to deceive an investor. The false information would be targeting securities. Now, securities would be stocks, commodities, or anything investment that an investor could be enticed to buy that would actually be turned into a loss. Now, there are several strategies those engaged in security frauds may use, and it'll include churning, front-running, and bucketing. Now, these terms are used by stockbrokers using their position to deceive clients. You'll find those definitions in your textbook. One that you've likely heard before is insider trading. It also involves a person in trust position, uses that position to gain insight in order to gain an unfair advantage as to when to buy or sell a stock for the greatest gain. Now, this information gained is not otherwise available to the public to advantage themselves of as well. That's why it's insider trading. Not everybody knows about it, and you get the special treatment. That's not legal. There are many ways executives and traders use insider information. Sale of a business, business takeovers, stock values. There are a lot of ways, unfortunately, that this occurs. Investment frauds, they involve how a fraudulent investment based on it's too good to be true. If it is too good to be true, it probably is too good to be true. So it's fraudulent investment based on too good to be true, low risk, and the returns on investment that turn out to be not true. Ponzi schemes are an example of low risk, high return investments. However, the newest investors end up generating the profits for those who were early into the investment. The example was what I mentioned Bernard Madoff in the introduction. In his Ponzi scheme in 2008, he made out like a bandit. He's in jail now, mind you. $64.8 billion he scammed from friends and family and strangers. Of course, Gary Sorensen and Milo Brost, the biggest in Canada, was only 100 to 400 million in 2015. So huge monies can be had through those sorts of frauds. Occupational fraud. Let's say you're working and you have taken something from the place that you work, not intending to return it, and you use it as if it's your own. Essentially, you've committed occupational fraud. If you've taken paper and pens from your worker and you never returned them, never paid them. That's essentially what occupational fraud is. To use your position, whether you're the employee or employer, to steal or embezzle from a company's funds or company's property for use for themselves. Now, there is, according to the Certified Professional Accountants Association of Canada, it does suggest that there are 3 kinds of fraud. Misappropriation of funds is one. This accounts for about 85% of employee fraud, and basically this is stealing from your employer. Secondly is corruption. Now, this occurs when employees or the owners of these businesses interfere with the decision making by using their position to create personal gains. And then the third type of fraud is financial statement fraud. This occurs when an employee alters or changes the balance sheets, the income statements, cash flow statements, all with the intention to deceive others and gain some personal benefit. Client fraud. And this is another, the white-collar crime is diverse. Basically, this is cheating a company by making false claims for a reimbursement or not paying what is owed. In this case, it's the organization. It's the organization that's the victim. There are some variations of client fraud that will start with insurance fraud and will follow that with healthcare fraud and tax evasion. We'll start with our insurance fraud. Any fraudulent act intended to gain payment from an insurance company based on exaggerated claims or more self-inflicted damage to property in order to collect a payout. Now this, you've probably heard where people have claimed that they've hurt themselves at work and they're not able to carry out their work because of that injury, and yet here they are on Facebook taking a holiday and they're water skiing and surfing. Well, that's probably insurance fraud. This is second only to tax fraud for popularity. The insurance fraud affects anything protected via your insurance: health, home, car, life. Healthcare fraud, there are 2 sides to healthcare fraud. One of these sides is when healthcare provides intentional bills for services that weren't provided. Doctors that submit inordinate number of bills for claims they never saw patients for. This can total in the neighborhood of 600,000 to 3.4 billion. This represents between 2 and 10% of all claims may be fraudulent. Again, with the pandemic, we saw examples of benefit fraud. We have been hearing of some who have been caught and are being charged currently right now as we speak. Tax evasion. With tax evasion, it's the government that is the victim. This has been a challenging component in an area to study, mainly as there are so many people who underreport their income. And secondly, the challenge of separating the honest errors of reported income versus the fraudulent ones. Canada Revenue Agency is responsible for viewing all taxes from businesses and individuals. If fraud is detected, one part of the sanctions are for the names of the guilty to be made public. It's acting as a deterrent, or at least that's the intention. The next category we'll explore is public corruption. This category also has various types of, including bribery, influence peddling, corruption in criminal justice system. Now basically this category involves the exploitation of one's position of trust in an effort to seek financial or other advantage and gain. Bribery. Bribery is the offering, giving, receiving, or soliciting something valuable or desirable in exchange for getting something to get something in return. Bribery is probably the most common of all corruption. Influence peddling is the use of one's influence or connection with persons in authority in an organization to obtain favors or preferential treatment for another, usually in return for payment. We see this in a variety of potential circumstances. Someone offering money, calling it a donation, to a person, to a position in their company in order to take advantage of a political party that might attempt to influence decisions in the government based on this donation. That could be seen as a bribery. This is very active in U.S. politics, donations to political parties with an expectation that their interests will be supported. The second subcategory is corruption of the criminal justice system. This one is particularly troubling as it's the people in and supporting the criminal justice system and the moral standard, and therefore can be devastating to the public. This can include police officers who could be involved in bribery, breach of trust, be engaged in active criminal activities, correction systems where the public trust crime can damage the service provided and affect the very many other officers who are trustworthy. Okay, what we've done is gone through what is going to be counted as part one. We're going to pick up in part two with corporate crime and organized crime. So we'll see you in part two in this week's folder. Bye now.